In this video, I will do the technical analysis of Dow Jones Industrial Average Index for the week commencing from February 14, 2022. So this technical analysis, it will be in two parts. First, I will do it on the weekly chart, then I will do it on the daily chart. So this way, we will be able to get the most accurate results as we are getting for last many months. So first, let me show you how the market reacted to the previous technical analysis. See, last week I told you that market is going to move up. Okay, this was clear that first the market will move up, but the question is the limit. So I told you that when you see the market is moving up, then what you need to see is that if there are two candles that are closing above the Ichimoku cloud. So if there are two consecutive candles closing above the Ichimoku cloud, then the market will further shoot up. Okay, means then the market will be extremely bullish. But if the market fails to close above the Ichimoku cloud on two consecutive days, in that case market is going to come down. Clearly the market is going to come down. So this is what I told you, and then whenever it comes down, chances are it will hit the 200-day moving average. So here you can clearly see that this is what I told you, that market will move up. It moved up, and moved up. And then after hitting the boundary of the Ichimoku, it came down. Okay, so because it came down, it closed below the Ichimoku, then this is what has happened on Friday. Okay, then it further came down on Friday. Okay, so this is what I told you, that if it fails to close above Ichimoku, if it fails to cross Ichimoku, and if it comes down, then for sure it will come down. Okay, so this is, so the market has moved exactly as it was predicted last week. Okay, so let's begin a technical analysis. So first I will do it on the technical analysis on the weekly chart. Okay guys, so we are here on the weekly chart. This is the weekly chart. Okay, weekly chart means one candle represents 1 week. Now let's do the technical analysis here. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market has closed below the lower band and the median, which means the market is bearish. Then comes the moving averages. Market has clearly closed below the moving averages. Okay, which means the market is bearish. Now one more thing, we were looking for a crossover in the moving averages. So the crossover looks like the crossover is about to happen. It has not happened yet. Okay, so it is about to happen. If this crossover happens in the next week, in that case this crossover will be seen after after September, October 2020, which means after 1.5 years. Okay, these moving averages, they will cross over. Okay, so that will be, yes, so that will confirm a correction in the market, means a long-term correction. Okay, moving averages, it is bearish. Then Bollinger Band. Okay, now comes the Ichimoku. Market has closed above the Ichimoku, which means that on the weekly chart through Ichimoku, market is bullish. Now let's look into some other technical analysis here. Some other technical indicators. First we have the MACD. MACD, that directional MACD is bearish, clearly bearish. Okay, and the divergence in the price through the moving average is normal. Okay, it is not much, it is normal, which means that yes, the market has potential to further come down. Okay, now the stock RSI is K channel is 19 or 20 and the D channel is 17. Okay, so it is, see, it looks like it is bullish or it is marginally bullish, but it is still bearish. So below 50, okay, it's bearish. Above 50, it is bullish. Okay, then comes the divergence in the prices of the candles. Divergence is normal. Then comes the RSI, the momentum. So momentum is neither supporting bulls nor supporting bears. So here this thing is clear that on the weekly chart, market is clearly bearish, So now let's move on to the daily chart to see how exactly market is going to react. Okay guys, so we are here on the daily chart. This is the daily chart. This is the daily chart. So daily chart means one candle represents 1 day, not 1 week or 1 hour or 50 minutes. One candle means 1 day. Okay. Now let's first, okay, so let me first write down the support and resistance levels here. Okay guys, so these are the support and resistances here for Dow Jones Industrial Average Index. So now let's do the technical analysis. Okay guys, so the technical analysis here, this is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market has closed between the lower band and the median of the Bollinger Band, which means the market is bearish. Moving averages. Market has closed below the moving averages, which means market is bearish. Secondly, the nature of the moving averages, there is a clear fan out in the moving averages that is supporting the bears. So market is bearish. Then comes the Ichimoku. Market has closed below the Ichimoku, which means the market is bearish. Now comes some other technical indicators. If you look into the MACD is currently it is bullish, okay, but trading in the bearish territory. Then comes the stock RSI K channel is 74, D channel is 83. It is marginally bearish, okay, but because stock RSI both K and D channels are trading above 50, they are in the bullish zone, okay. Then comes the divergence. So divergence in the prices of the candles is it is normal. Momentum is neither supporting bulls nor supporting bears, okay. So here what we need to do is we need to wait for one or two more candles to see what happens to MACD. If the directional MACD changes, okay, its direction from bullish to bearish, then it will be confirmed 100% bearish, okay. So now through the technical indicators it is very much clear that market is clearly bearish. Now let's see what is going to happen in the coming week. See, this is the 200-day moving average. Last week also this 200-day moving average, it saved the market, okay, and because of this 200-day moving average, market bounced back, okay. So this week, see, it came down and okay, so it did not touch the this the 200-day moving average, rather, okay, even before touching the 200-day moving average, there was a retrace in the market. So now what you are going to do again, so this is what I've mentioned in my technical analysis for S&P 500 also, that this 200-day moving average, this will decide the fate of the market, whether market will be bullish in the near term or it will be confirmed bearish, okay. So what you are going to do here is that you need to wait for Monday. Do not trade on Monday, okay. Wait for the Monday, let the market do whatever it want to do on Monday. See what kind of candle is formed, or see the closing of the candle on Monday. If you see that market has closed below the 200-day moving average on Monday, then yes, in that case you can expect the market to further come down to here, to these levels and to this level, okay, means the market will come down, okay, in simple words. Now if market somehow manages to close above 200-day moving average on Monday, then there will be two closings above 200-day moving average. In that case, yes, you can expect the market to further move up here, okay, and then to the to these levels 35,430, okay. But see, again, the market is not bullish until and unless it crosses the Ichimoku cloud. So when you see that market is crossing the or have crossed the Ichimoku cloud in the bullish zone, okay, see, this is expected to happen after 23rd 24th Feb or after 28th Feb, okay, when it will be trading around the boundary of the Ichimoku, okay. So market is not bullish until and unless it crosses the Ichimoku in the bullish side, as simple as that. So you need to wait for the market to see what is happening, but yes, in the meantime market still can trade below the Ichimoku, means in this particular zone, in this particular on these these particular levels. So this is how you are going to trade. So you need to focus on the 200-day moving average here, because 200-day moving average will define the fate of the market in the coming week. So guys, I have given the link to my Discord spreadsheet in the description of the video. You can take a look. Okay. So guys, this was my technical analysis for Dow Jones Industrial Average Index for the week commencing from February 14th, 2022.